Today's show is sponsored by Peak Housing REIT. To learn more, go to thepeak.group.
54. How about that? What do you think?
That's 54 is a lot.
Yeah, and there's the plaque. Guys, this is like a very big show now. I don't know, what was the latest stats? Like, where was our placement in the investing podcasts? We're like a big show.
We've hit number 7.
Number 7.
Who's
on,
one
on
through
Apple
Who's 1 through
investing
6?
podcast.
All Dave Ramsey.
It's basically
No, for real.
No, I
Not
mean
even
for real.
kidding.
It's Dave Ramsey. I think maybe a Motley Fool and Susie Orman, something like that.
But we're in the Susie Orman League. I feel like that's the big time, right?
People call me no.
What?
I don't know.
The Susie Orman of finance? I think she's the Susie
male
Orman.
self-censor.
Yeah, nothing came to me.
Anyway, it's a very big show, so be on your best behavior, I think is what I'm trying to say. All
Wait,
right.
hold on. Brendan's got a notepad. What's going on? What's with the notepad?
Old school. Like, I got to write it down.
Are you going to be taking notes while we're recording?
Hold on.
If you say something really...
What do you have
It's a blank.
What do you have
What
taped
is
into
that?
the notepad?
What is that? This is my child.
Well, so knowing you guys are like
that your homework?
historical... No. Follow me here. You guys are historians of finance.
Sure.
We sure are.
So
right we are.
last week was the 25th anniversary of something.
All right, let me do the math.
Can you think of what it was?
25 years ago. Oh, LTCM.
I was going to say Stone Temple
Asian
Pilots
Contagion.
broke up.
Yes.
Okay.
But something like the trigger was the Thai baht devalue.
Sure.
That was July 2nd, 25.
It got depegged.
depegged. And
That's
like
why you brought your homework?
Wait, so okay.
Well,
so,
just because like the numbers are crazy.
hold it up so we could see it. Literally show us that.
So
Can't see that. All right.
It's incredible.
from peak to trough. So this is the 97 high to the 98 low. Indonesia in USD terms lost 92%. Malaysia 87.
Wait, what are we talking about? The currency?
No, stock market.
Stock market.
wow.
Stock market. Thailand 85, Philippines 81, South Korea 79.
Wow. South Korea lost
Singapore,
80% of its value?
63, Hong Kong 60, Taiwan 50.
How long did it take for those to recover?
So some of them haven't. I mean, that's the kind of crazy thing. Is some of them
And all of
are
that was
technically-
because of currency contagion is what sparked that whole thing?
well, policy error, mismanagement at the government level.
It was 3 Hours Capital. They were over-leveraged.
Hot money came in, left.
3 arrows got involved.
It was
Nothing good happens from there.
But it was, it was an epic disaster. So I thought, you guys love financial history. Like, I don't think you'd
We do.
mentioned it,
You're saying
so-
that was 25 years ago today or this week?
July 2nd.
Where was I 25 years ago today?
97?
Maybe preparing for my bar mitzvah?
In 1997?
When I was 12.
You were at a Google Dolls show, for sure.
No,
Front
I
row.
did not do Google Dolls.
Front row.
At all.
Spin Doctors.
Mouthing the words to Black Balloon.
No
That's-
doubt.
I know where you were.
No doubt was hot when I was 12.
No doubt. Okay. What have we learned from that crisis? Nothing.
No, I mean, I think, for today, you talk
What
about
should we learn?
potential for policy error from the government, right?
What did they do? What did they do wrong that prolonged the problem or caused the problem?
Well, they had all issued dollar-denominated debt.
Which is hard to pay back in a crisis.
And then,
Yeah.
you lose your currency. You can't afford to pay it back. So you basically, you're ruined.
Now you issue dollar-denominated debt because it makes it more marketable to the potential buyers.
Correct.
Okay, but then the downside of that is you owe dollars.
Right.
So when you're in a currency crisis, that turns it into a spiral.
No bueno.
Yeah.
There's no way out.
It's this is the compound show. So that's the
It is.
compounded pain.
Oh, I want to intro you guys before we get. We're already in Thailand, and I haven't had a chance to do this. Brendan Ahern, who has a voice, you have a great radio voice. I feel like, right? Have you been told this before?
Face for radio, yes.
No. That's not what I said. That's me. It's only you.
Okay,
you have a
voice.
very how to explain it? You have good inflections.
Is that baritone? What is that?
yeah. What are you working with there? Is that a baritone?
You know, if you need me to do some intros for you, like we can talk offline.
Okay. We're gonna have you do some drops.
He'll be our announcer, a la George Takei.
All right, but your real job is the CIO at KraneShares, where you lead research and education efforts and focus on China and emerging market growth. You're also a leading commentator on investing in China. And you write, I read this every week, you write China Last Night. I know it's daily. I do my best.
That's all right.
No, but you're my source for how I find out what happened. Okay. So China Last Night is a smart way to phrase it, because for U.S. investors, all the shit goes down while they're sleeping.
Yeah, exactly.
So, okay. And you have a pretty big readership on China Last Night now? It's been growing?
It has. I actually don't know the numbers. I've actually never read it.
Okay.
It's somewhat ironic. I mean, I write it, so why would I read it?
You don't need to read it.
But I think it's got a pretty good pickup.
How are you building that audience? Well, first of all, how do people subscribe to China Last Night? We'll send them there right now.
Just ChinaLastNight.com.
That's it?
That's
so
it.
they don't have to go to the KraneShares website or anything?
No.
Okay. All right.
Is it on TikTok?
Not on TikTok. We're on Twitter.
Okay.
Okay.
So just at ChinaLastNight.
Before we get to Kai's intro, can I tell you something, Brendan? I was looking at one of your tweets today. You tweeted potentially big news for NEO and China Malt's extending EV tax break, and Twitter flagged it. Do you know that?
I did not.
Twitter flags it. It says stay informed. This tweet links to a China state affiliated media website.
So it's interesting. There's a great Chinese financial website called Nikkei Global. They're based in Shanghai. I don't think they have anything to do with the Chinese government.
Well, they might not have anything to do with it, but they're being overseen.
Better
by
safe
it.
than sorry, I guess.
Yeah, there's probably censorship approval, maybe, but it's like they've got real reporters. They do good
hard
work,
news.
and
Right.
they're shown on Twitter as like Chinese state media, which I actually don't think is accurate.
I blame Elon Musk. So no, he's going to get rid of all that. That's what he's going to do with Twitter. Like there won't be any more oversight of any of it.
I'm sure.
Kai Wu. Kai is back, ladies and gentlemen. This is your second time here. You're a veteran now.
Kai, you were a very popular guest the first time.
You were.
Yeah.
You get good feedback from coming on. You did, right?
Yeah,
Okay.
it was awesome.
All right.
Thanks so much.
Kai's the founder and CIO of Sparkline Capital, an investment management firm specializing in machine learning and computing. Prior to Sparkline, Kai co-founded and co-managed Kaleidoscope Capital and was a member of Jeremy Grantham's $40 billion asset allocation team at GMO. Welcome back. Welcome back, Kai. You follow emerging markets or Asian stocks at all? Or I know it's not like your primary focus, but like there's a lot of technology coming out of there.
Yeah, no, as much as anyone does. I'm not.
You got to go closer to the mic for me.
Not a specialist though. I'll leave it to Brendan.
No, I'm definitely not a specialist. All right, so this morning I woke up, speaking of China Last Night, and the first thing I saw was China considers $220 billion stimulus with unprecedented bond sales. So what is going on?
In a nutshell, as the world tightens, China's easing.
Is that why the stocks are outperforming? Is that why all of a sudden Chinese stocks are outperforming the rest of the world?
I think when you say China, you almost have to differentiate between the A-share market, the onshore market, so Shanghai, Shenzhen,
Yeah.
which is 95% owned by investors
Yeah, we can't
in
buy that.
China.
Right.
You can through KraneShares.
Right.
But you contrast that with the offshore market, so Hong Kong and U.S.-China ADRs.
Okay.
And I would say definitely the investors in China are more on top of this easing cycle coming in China, where a lot of foreign investors, they're more worried about the political, U.S.-China political relationships, headlines, some of the regulations from the U.S., from China. So you have these two different markets that move very, very differently from one another. So certainly I think the story for foreign investors, they're starting to connect the dots that most central banks are tightening and China's actually going the other way.
Are they doing that like on purpose to go the other way?
Oh, yeah. I mean, they, you think about, you have global stimulus, you give people free money. What do they do with it? They go out and buy, laptops, they
Bored
buy
apes.
iPhones, Peloton bikes.
Yeah.
So
Ponzi schemes, all kinds of stuff.
Yeah, you're Simon.
Right.
So you take in, that's kept the world's factory busy for 2 years. As that goes away, China's export-driven manufacturing is going to slow. So how are they going to offset that? Well, through Bloomberg News talked about this infrastructure deal, but they mainly got to raise domestic consumption, right, to offset this weakness in part of the economy.
They got to get Chinese consumers pick up the slack for the fact that the rest of the world is going to take a break from buying physical goods from China.
Yeah, it's like everyone who wanted a Peloton went and bought it.
Yeah.
And so you're just taking 5 years of demand and squashed it into 2. So things are just going to fall off. And
So the way they do something like stimulus, they allow the local governments to sell bonds again. and then that money goes into infrastructure projects.
So that will be infrastructure, but more. I think the bigger issues are they've lowered their loan prime rate. They've lowered.
What's the rate? What's the rate to borrow money in China now?
Well, the 10-year Treasury is about 2.8%. So it's comparable to where U.S. Treasuries are.
Who are the buyers of their bonds?
For Treasury bonds, it's virtually all in China. They do have an offshore bond market, which dollar-denominated bonds in Asia. It's a smaller part of the overall bond market, but that it is, that market is dominated by real estate developers, Chinese and Asian. It's done horrifically over the last 2 years because of Evergrande and concerns.
But that's supposed to be a store of capital for Chinese businesses.
Yes.
Is to buy Chinese treasuries, the same as it's supposed to be here.
Oh, huge. Insurance companies, sovereign wealth, et cetera.
We're going to stay on China a little bit longer because I wanted to get your take on how they're handling the COVID and lockdown off, lockdown on, lockdown off. Like, what is this bullshit? Because it's not helping the rest of the world. Is it helping them?
Well, it's saved 1.5 million lives.
Is that what we think?
Yeah. If you take Omicron,
So our lockdown saved zero. Conservatively.
In China, there's skepticism amongst the elderly on getting vaccinated.
Okay.
So you take their population and you apply Omicron to the elderly population. You kind of, they did the math.
It would have run through them.
It would have killed a lot of people.
Like a nursing home, like we had in 2020. Like all the nursing homes got hit really hard.
Yeah, they had said it would have caused 15 times more demand for ICU beds than they have available.
Okay.
So it's the West calls it a zero COVID policy. In China, they call it lives first.
Okay.
Now, I think what we're seeing is that post the Shanghai, the big lockdown, they're not doing as draconian lockdown. There's a full-on outbreak in Hong Kong, 3,000 new cases every day for the last few weeks. Xi'an, China, Shanghai. So they're doing more targeted lockdowns. So more residential district neighborhood as opposed to shutting the city.
I need my semiconductors at a certain point, right? So I'll give them another 6 months.
Yeah.
I don't know. This is like the issue though, right? The manufacturing is not keeping pace with demand because we rely so much on manufacturing in the region.
Yeah, it's not just the stuff they make; they make the inputs that get manufactured elsewhere.
Right.
And it's not so much you shut Shanghai down; it's more of the port got shut down. Truckers couldn't get the stuff through the city, so that's where we feel like the early read is that they're not going to do a mega lockdown like we saw. I'll knock on wood. Just we don't know, but if you look what's happening in China in terms of some of the COVID outbreaks, it's a different response than what we saw.
Last thing on this is China's tech giant crackdown over. We're gonna throw some charts up real quick. John, you want to hit us with Tencent?
Well, okay. Here we go. That was quick. Good job, John.
This is like a huge drawdown in. Was this the largest stock in China at one point?
Tencent and Alibaba were always kind of 1 and 2.
Was it $1 trillion? Did it cost $1 trillion ever? No, not quite.
They got close.
Okay.
This is a 60% at its worst drawdown in Tencent, which in market cap terms is how much money?
Oh, we're talking about
Probably 400 billion.
I would say 300 to 400 billion.
That's like enormous.
Yeah.
Okay. What else do we have? This is Alibaba. Same thing. Down 75%. Can you imagine? Alibaba down 75%. I think in the United States would be equivalent to Apple being like as widely known and widely held. That'd be like if Apple fell 75%.
Well, that's a little bit of the talk about the Asian currency crisis, right? Is that you have that sort of effect in terms of the price action of the stocks. And the argument would be that what has actually happened isn't nearly as bad. It's just a lot of people have been forced out of the names because of the worries of China's internet regulation, because of things like tax loss selling and the ADRs. You have indiscriminate price sellers.
Yeah.
And so that's just put all this negative. It's not fundamentally driven. It's just people. If you're an EM portfolio manager and you hold Alibaba, you're worried about looking like an idiot. And so it's easier just to kick it to the curb than to try to defend it.
Tencent went from a high of 950 in market cap, 950 billion, to a low of 378. These names all bottomed in March.
Yeah.
And so this was surprising to me that over the last 6 months, they've actually dramatically outperformed the NASDAQ 100.
Yeah.
Now, if you zoom out, they've gotten killed.
Yes.
So it's maybe a little consolation, but they did bottom much earlier.
Let's do JD real quick.
And what's JD? Is this like the
It's like
Match.com?
It's like Pepsi to Alibaba's.
Yeah,
Coke.
it's Alibaba's rival.
One more, two more. Meituan. This is what is
this?
It's like delivery
Delivery listed in Hong Kong.
down 77% from high to low, or from when is this going back to the highs? Okay.
Yeah. I mean, if you think about it, like you had Archegos in February of 2021.
Oh my god.
And that's really kind of kicked things
And
off.
Pinduoduo down 87%. This one murdered.
Another e-commerce, the number 3 player in terms of e-commerce in China.
So, Brendan, all of these names are in KWeb, which is that your flagship fund?
It is.
So what were the conversations like for you and your team over the last couple of months? I guess particularly the third, fourth quarter of 2021 must have been a lot of fun.
Well, to really pour the salt, you've got the trade war, you've got the tech war, you've got COVID, then you've got Archegos.
By the way, stop. I have to stop you. I've heard Archegos, Archegos. I've never had an Archegos, so that's a new one to me.
I'm just saying in my deep baritone voice. Hopefully, it sounds good. I have no idea if that's the pronunciation.
Well, it's a made-up fucking word, so we can say we can say it however we want.
Oh, sorry, I cut you off. Sorry, go ahead.
So anyway, so just I mean, for the team collectively, like it's been busy, but I think there's been a void to fill about this. The point of China last night for KraneShares was a balanced perspective, and there's things that happen. You might not like the rationale, but there is a rationale.
You're not doing a nightly email cheerleading China. You're basically just talking about what happened in the market.
Yeah. I mean, ultimately, China is 18% of global GDP. If you own U.S. equities, you're highly exposed to China.
Mm-hmm. Okay.
That if you're really worried about China, then you got to be worried about Apple and Nike.
When do you write this note? Do you wake up at 2:00 in the morning?
I wake up around, varying on the day. I get up, sometimes 5:30, 6:30.
All right. You have a lot to learn from Kai. He's writing quarterly.
Okay. I'm jealous.
2:00 in the afternoon, usually.
Hey, wait, Brendan, explain this to us. So I've never seen this situation before where at the low, KWeb was in an 80% drawdown, or 79.54 to be precise. And yet, the fund had massive inflows in 2021.
Positive flows with negative performance.
I've literally never seen that before. It's usually kind of the opposite.
Yeah.
Can you give us some color?
Dude, it's his voice. Imagine he calls you up like you're a hedge fund that's allocating to Chinese stocks, and you're using KraneShares, and Brendan's like, "Good morning."
We only do conference calls.
Here's
no
what
Zoom.
happened in China last night.
Could you give us some color on
How did you do that?
Yeah,
Because
seriously.
there's a lesson there.
Well, I think it's the collective effort of getting in front of people and explaining what's happening. But it was about, there's no alpha on a drawdown. Like, on the charts you just showed, like, why would pay someone to own Baba versus JD or Pin? They're all
Doesn't
going.
make a
It's a
difference.
beta play,
Right.
So if you're tax loss harvesting out of the individual names, just buy KWeb. If you had hired active managers, there's very little alpha. It's a beta play. And then I think one of the concerns has been this Holding Foreign Companies Accountable Act, the potential delisting, and we've converted. A year ago, KWeb was 25% Hong Kong. Today, it's closer to 75%. So people are almost hiring us because of this potential delisting risk of saying, maybe I don't want to or I can't hold Tencent in Hong Kong or Alibaba's share class. Like, we'll do it for you. So I think some of it is people recognize that, for the last 2 years, we spent a lot of time in Washington, D.C., trying to tell politicians, U.S. regulators that this delisting idea is a really bad idea. You're not hurting the Chinese government. You got $2 trillion of market cap held by U.S. investors, and delisting the stocks does nothing to hurt China. You're hurting U.S. capital.
What
markets.
was their response to that?
I think the SEC is the regulator. It's not their job to opine on the regulation or interpret it. They're the enforcement agency. So there's very little they can do. I think for unfortunately, there's a push to potentially shorten the window for delisting from 2024 to 2023, which is still not. It's in one of these bills that So who knows how that plays out? But I think in general, the view in DC is, well, we're forcing China to deal with this issue, and that's a good thing. Well, that's true, but putting that
They have their
gun
backup,
to the head.
Their backup plan is Hong Kong listing. You.
Well, that's where this is the we call HFCAA the Hong Kong Investment Banker Employment Act. That you're literally forcing jobs out of New York to Hong Kong.
So then, what do you do in that situation? All your holdings become Hong Kong listed issues.
Well, we're converting. So we don't hold Baba US. We own Alibaba Hong Kong.
So you're getting ahead of that.
Yeah.
You're wondering how he's doing that? Yeah.
We're taking some notes.
Well, if they start delisting all your stocks, it's like, well, wait a minute. What do I?
Yeah.
So I think ultimately the two sides figure it out because it's so embarrassing for both sides.
Okay.
But we recommend to people, talk to your custodian, talk to your broker dealer. Can you hold a Hong Kong stock? Not all custodians, not all U.S. broker dealers allow that.
So if they can't, and they want allocation, then they have to use a fund or an ETF.
Correct.
Okay. They won't be able to just hold the issues.
Correct.
Huh. Okay. So that's not for a couple of years, and it sounds like a lot can happen between now and then.
Yeah. I think our view is we're optimists and that we think the two sides, this is a resolvable issue. That these companies, China should allow the companies to adhere to a global standard. PCAOB does great work. And for the Chinese government, there's a rationale for allowing this, which is these companies provide a great insight into China and China's economy that you might not get elsewhere.
So these numbers are a little bit stale, but this surprised me. I don't know who threw this chart in here. This goes back to 2018. Apple derived 17% of their revenue from China in 2018.
Yeah,
it's a massive number.
How much?
17.
I don't think that's not surprising though, because that's like their biggest growth market.
Look, there we go.
Oh yeah. This is where a lot of people will say I'm worried about China, U.S.-China play. Well, our view is if you're worried about it, this is what you should be worried about.
Which facet?
Well, that you own a lot more of these companies. Than,
is this a factor in how you're thinking about portfolio construction? Like, are you worried about overseas sales for tech companies or overseas domicile?
It's not something we focus on too much.
Okay, how come?
It just kind of washes out, I guess. We're trying to look at the things that the drivers of kind of macroeconomics and politics are really difficult to predict for us.
Not for me, but
For you, you got it. Brendan's got it.
Yeah.
For me, for our algorithms, right, we're focused on fundamental value. So brand, human capital, network effects, and IP. And obviously over, certain periods, politics matters, but it's just very difficult for us to know. And
you can't quantify it.
You can't quantify it, and to some extent, the discounts, right? So obviously EM stocks trade at the discount. The reason why, in part, right, is to bake in that uncertainty, that risk premium. And we're just saying, look, if markets are at least somewhat efficient on this dimension, we can safely ignore it and let it just be noise in our models.
So, there's going to be big price movement, but you're saying that'll happen in both directions.
That's right, yeah.
Okay.
Well, there's systematic bias one way or the other.
The interesting is that those names had no beta to Trump tweets to U.S. political.
Which
all of those names that only the China names would trade based on tweets, but you would argue that these companies have a beta.
U.S. companies with high China exposure.
Yeah. So Tesla in 2018, I'm sure the numbers are different today, but Tesla had 25% of their revenue. That's a huge
and the
number.
Trailing 12, yeah.
Oh, so it was 2017?
No, that's from today.
Oh, wait, what? This looks like it's it says sales generated by U.S. multinationals in China amounted to $376 billion in 2018.
Okay. So
are we talking about different charts?
So the table is different from the quote. So the quote
here we go.
Yeah. So this quote came from the New York, the Fed here in New York, where they run a blog called Liberty Street Economics, and they wanted to quantify what has the trade war done. So this is from back in 2018. They basically said you've got $376 billion of U.S. companies' revenue is generated in China. And this was kind of the point where China says we don't have a trade deficit with the United States. That the U.S. definition of trade is something, you build it in the U.S. and you put it on a boat. But you have all these U.S. companies that own factories in China that then sell in China. So China's view is, well, who cares where Nike's plant is, as long as Nike's selling to the Chinese.
Right.
So if you take the $376 billion, add it to the trade deficit, there is no trade deficit.
Right.
Arguably the U.S. and so the New York Fed was saying,
Right. Apple's doing 300.
That's total revenue.
66 billion revenue in China.
Yeah. So then on the bottom was working with Morningstar. We were able to kind of quantify these numbers. So this is the table of stocks. This is the trailing 12 based off their last quarter's earnings, according to our friends at Morningstar.
You know what's so funny? Amazon, only 5% of their revenue is from China, and that's $25 billion.
It's crazy.
And that's only 5% of their revenue.
Yeah. I mean, the interesting one, I mean, the energy ones are interesting.
That's weird. Chevron, 19%. I would not have guessed that.
Texas is now the largest exporting state to China, overtook California.
Is that right?
And that's LNG, oil.
Oh, okay.
ExxonMobil's building a multi-billion-dollar petrochemical plant in China. They're actually like number one in synthetic lubricants and like gas, in China. It's interesting.
Do you own any of these EV stocks, Kai, in your portfolios, like NIO? What's LI?
We
Li Motors?
Li Auto. Yeah.
Li Auto?
Well,
Okay.
we don't because we're U.S. focused. But I
Okay.
can tell you, we don't own Tesla. We don't own Rivian. I think the pure play EVs on our metrics seem overvalued.
Okay.
It's like, look, like for example, like Tesla, they have a good market share right now. They have a first mover, but it's not like GM and Ford and so many of these other companies cannot. They're able to figure this out, right?
But
Like,
aren't you like big on the intangible stuff? Like,
Yep.
isn't Tesla's brand worth, or like, are you saying that even that part of it's overvalued?
Yeah, we're saying that Tesla has a formidable brand. They have, great IP, great talent. They're really ahead of the curve on pretty much all these dimensions, except that their market cap is greater than all the other auto companies combined. And so it's like at some price, like it's just not worth it anymore, right? And then conversely, you have the legacy automakers who are, a few years behind, admittedly, but they also have strengths to their name. They also have brands. Ford and GM, they also have, actual manufacturing capacity and technical ability there. And they're actually coming out with new models, right? Tesla has not really continued to push the R&D ball forward, unfortunately.
So when you're looking at stuff like this, are you looking at like patents and copyrights and all that sort of stuff?
We're looking at that. We're looking at who they're hiring, like what sorts of like skill sets do their employees have in terms of, full self-driving and things like that. We're seeing actually interesting growth of talent and IP into some of these legacy firms, and they're trading at such a cheap
Do any
price.
Do any of the legacies make the cut?
So Ford's in there. I think GM might be in there too.
So you have Ford and GM and not Tesla, and the main reason is just like
Price.
the price.
Right. It's like, the
Okay.
idea of disruption at any price versus disruption at a reasonable price. And for us, we care about the price we're paying for these things. And just because Tesla's a great company, which in many dimensions it is, at some price it becomes, untenable to hold.
On a back test, was there a point in time where Tesla would have been a holding based on that, and it's just launched out of the stratosphere?
I don't think so, no.
Okay, it was because it's always been
Yeah,
expensive.
ever since it kind of came out, it's always been expensive.
Okay.
And again, I'm just not to belabor the point, but you're not looking at like book value type stuff. Like you're looking at next generation type metrics, and even still,
Right.
like giving all the credit to the network effects and the whatever. Like even still,
Yeah, we're doing the best job we can to make it easy for Elon to get into the portfolio, and he still manages to mess it up.
Right, because it's next gen metrics, but then there's a multiple on those metrics.
Exactly.
And Tesla's expensive on everything.
Right, because people just love the stock. I mean, they have a huge following. There's so much hype around the stock, and it is a good company. It is a great company, but again, at some price, you just can't hold it.
Is anybody asking you for an international version? Like the ADRs that trade in the U.S. and they meet the requirements, but they're just foreign domiciled?
So I don't know if ADRs themselves give you enough breadth, but there has been requests to launch parallel products in IFA and
Right.
developed international,
Yeah.
and then emerging markets. And I think I've said this before, but one of the really cool things about all the machine learning techniques that we use is we use statistical natural language processing. And what that means is that in order to port the models from, say, English to Japanese to Chinese, it's pretty easy because all you need to do is you don't need to go there and hire boots on the ground, hire a bunch of linguists and experts in those languages. Instead, you can go out there and take, the Wikipedia sites from Japan or whatever, right? The entire Japanese internet, feed it into your models, it retrains on that language, and you're pretty much good to go from there. So I think there's a lot of capacity to kind of take strategies like this and scale them abroad, and especially into these more like long tail countries where like, I don't know, like Thailand you brought up, right? Where, may not be a big enough market to justify huge teams of analysts on the ground, but, it can be done and definitely gives you an advantage to be able to speak the local language.
Is all the same data available? Like that the machine learning is reading something.
Yep.
So do all of these companies overseas or all of these countries, is it standard to track the same metrics that you're tracking for U.S. companies? Or is anything missing?
It'll vary by country. So, obviously there's the equivalent of the U.S., patent office, right? In like Europe, for example, but like not in all countries.
I believe it's called Lay Patent Office in Europe. Okay.
That's right, yeah.
But you can get a data feed on it and you can figure out how you want to read it.
Local news sources are easy, company communications are easy, and then obviously, as you know, filings are kind of completely different depending on the country.
Okay, because I'm thinking like a KraneShares by Sparkline collaboration, China Innovation Fund. I'm just spitballing, just spitballing.
We can make it happen.
All right, this is the week that innovation bounced. I think, Mike, ARK is outperforming the S&P for 2 weeks now.
I mean, this is a very short time, but over the last 5 days, ARK's up 12%, 12.5%, and the Qs are up 4%.
How much is ARK off the lows? Do we know? It's like 20? It could be more.
Yeah, it could be.
Remember we were like, you can't come back from down 80%?
Can't come back.
Never say never.
No. The price, no. ARK will, I don't want to say never make a new high.
It's so far down.
But like, it might never make a new high.
It's so far down. But this was a big bounce. And I don't even know what stocks are. I know Tesla is still in the top 5, but I don't think it's...
Over the last, again, 5 days, so whatever. Barely any time. You've got Ginkgo Bioworks. I don't know if she holds it. I think she might. That's up 14.5%. Moderna's up 12. Datadog's up 11. Teladoc's up 10.
Zoom.
Roblox is up 10. Rivian's up 10.
Wow. Okay. So they don't go straight down, or at some point they stop going down,
do.
at least for a little while.
They've gone straight down for a long time. It's been a long time.
Yeah.
It's February 21.
These are all down like 70% minimum, right?
Some are down 80 and 90.
Okay.
Like, literally.
Yeah.
What's this next chart? Show me this. Why lesson 2 after PE reset, earnings revisions.
Oh, this is great. Okay, this is great. This is from Co2. This guy, Eric Newcomer, has this awesome Substack, and somehow he got access to a deck that they were putting together. What we're looking at is phase 1, 2, and 3 of a PE reset, earnings revision, and sell-offs. So what they're looking at is the NASDAQ 100. Or the NASDAQ Composite.
Oh, this is from the dot-com blow-up, March 2000.
All right, so phase 1, you've got the trailing 12-month PE, and you see in phase 1, that's the first to go, is multiples compress, okay? Then in phase 2, you see earnings revisions. Then you start to see earnings revisions come down, and I think we're getting there. We're starting to see some downgrades from companies, which analysts are way behind the ball there. And then finally, you get capitulation.
So look what happens, though, in capitulation. You have a rebound in PEs, probably because earnings are dropping faster than stocks for a little while. Mm-hmm. But then they both catch down with each other. And I don't know, he didn't want to do the bounce. He didn't want to show
I just thought that this is a really interesting way to show the process. Again, you have the PEs mushed, and then you get the downgrades, and then you just get it all.
Yeah.
So what's interesting about this is the timing that we're looking at it, because earnings season starts next week. We really have not seen meaningful S&P 500 earnings revisions lower. Mm-hmm. I know that the estimate has been lowered, but like that could be, this phase 2 thing could be the thing that's about to start now.
Well, I think that's what a lot of institutional brokers are starting to talk about, is that you got to start bringing some of these estimates in, and that's only going to raise.
But the thing is that they're not getting that guidance from like S&P 100 companies.
Well, Apple and Microsoft earnings estimates from analysts has not budged. Like literally still at all-time highs.
And that's like 12% of the S&P. I don't know what the earnings contribution is.
Google's come in a little bit. I guess they're more sensitive to the economy with advertising money.
Yeah.
I'm very excited to see what these companies say.
Well, I just wonder how much TikTok is eating the lunch of the Googles and Facebook.
Yeah, Snap.
that, clearly in China, in the China space, we see it, that it comes up on the earnings calls where they say, like, we're competing. If you're Alibaba or Baidu, you're competing with TikTok in China, and it's definitely a big, big threat.
Kai, why is TikTok killing everyone? Like, do they have the smartest algorithm or the smartest employees? I know you're not like a TikTok analyst, but like, are you seeing anything in your data to suggest why they're just killing everyone?
Well, I think it's all about attention, right? At this point, like we're all competing for eyeballs, and TikTok is the most addictive. Their short form videos are addictive, and then their algorithm
I refuse
is
to
amazing.
download it. I refuse. It will not be on my phone. Do you guys have it?
Dude, you could just end up in a loop that
Do you
can't
have
get
it?
out of.
Do you have it?
Dude, I'm a user. I'm
Yeah.
a creator on
Everyone
TikTok.
go follow the compound on TikTok.
Do not do it. Do not for your own
Do
mental
it.
sanity.
Do it. Do it now.
Kai, are you on TikTok?
I have TikTok. I have not ever produced any content.
He's a viewer.
I don't know how to dance.
Yeah. I don't either. We put content from this show on there. But
So I am on TikTok then.
yeah.
All right,
And
so
it
Kai, you did-
does
you-
very well. 500-600 people watch.
You
It's
did
great.
this amazing post a couple of months ago, breaking down like where are ARK's returns coming from innovation, from X, Y, and Z. What did you find?
Yeah, so the big question there is, people are like, hey, innovation stocks are down 80%, innovation is dead, we're never going to come back from this, etc. And so the question was, is ARK really innovation? Is that what you're buying when you buy ARK? And what I was able to do was take the returns of ARK and decompose them into a few different pieces. So kind of the most important ones are this innovation factor, which is exposure to innovative technologies, AI, robotics, genomics, etc. The second category are your standard like fama French, what they call it, like style premium. So these are like value, growth, size, quality, momentum, you'd say, and then alpha, right? And so I guess the bright spot was that she has that alpha, right? Relative neutralizing for all these other factor exposures. It turns out that she actually has managed to pick stocks and beat this benchmark in excess of her fees, which is really good. I mean, she found Tesla early, right? That's a hard call to make. As I was saying, my models couldn't have picked that out.
Right.
Everyone was overvalued, based on trailing metrics, and she kind of correctly foresaw the future. Great. And then of the first two, they have both contributed to her returns. The innovation factor has been kind of the biggest contributor. It's been one of those things that ARK has been long innovation as is her brand, and that's done really well. And by the way, like the way I constructed this factor was I went back and like looked at 200 plus years of patent data and was able to find that when you see technologies trend in like the patent literature, like you see the rise of like the railroad or electricity, the steam engine, those things tend to continue. Right, technology tends to kind of build on itself, and so it's kind of pretty easy to predict the future by just looking at the past and saying, let's run like a Google Trend style algorithm on the clusters of patent technologies, which we use like machine learning on the abstracts to define through time. Right?
Yeah,
That's
Michael
how I
does
did
it that
it.
way also.
That's how you look at the technology.
That post was so good, I wanted to punch a wall. It was unbelievable.
So wait, so your finding though is that she actually did have both alpha and was benefiting from innovation as a factor.
Yes.
Like not as a buzzword, but like the number of patents. How do you look at that? Per stock or per what?
Yeah, so what we do is we don't look at the number, we look at the type of patents. So we look at all the abstracts of the millions of patents and classify them into technological groupings like AI, right? And then we say, at any point in time, what are the trending technologies? Because it changes each year. Like every year is a little bit different. Like cloud computing was not a thing 30 years ago. Today, that happens to be the case. And then what we were able to say is which companies have exposure to the trending technologies, and that's easy to glean off of who is making those patents. And that gives you like a grouping of companies for each of these kind of thematic baskets, AI companies, robotics companies, et cetera. And then you can look at the performance of those baskets as if it were an ETF, let's say, diversified across many, many stocks. And then you ask the question, which is, are the companies that she's buying, exposed to that?
And then something changed though. Like all of a sudden she went from making innovation bets to just betting on glamour stocks, right? Like that's the main finding that you came up with.
Right. So that's what happened.
Wait, John, let's put this first chart up while Kai talks.
So look, I said there are three different buckets. Okay, so look at this. So the gray line is the performance of the ARK ETF, right?
Okay.
Where it went up and then went
Big
down.
round trip.
Since
Okay.
inception.
The blue line is just the market. So you can kind of put that aside. Then there is in the green is the innovation factor. So it's easier to see just in the table right? You're seeing what 4% annualized returns, on 5% vol, so it's a 0.8 Sharp, pretty good. And then the yellow line is her alpha, and then in the red line, that's style factors. So what that means is this is her exposure to your traditional kind of well-known value, growth, size, quality, these sorts of things.
It got more than cut in half.
And yeah, look, basically it was a helpful thing to have up until the peak, and has basically explained 100% of the drawdown. Right, it's a 50% hit. So when you say that ARK has lost money, what you really should be saying is not that innovation stocks have lost money, but that junk stocks and expensive growth stocks, unprofitable tech, so to speak, have lost money.
She started betting. She started betting on Robinhood and DraftKings
And Coinbase.
I don't think
Coinbase.
So DraftKings probably doesn't rank highly in patents, for example.
No.
But is that the only way to quantify an innovative company, or it's an important way?
It's one way. So what we can also do, right, is look at, as I mentioned, like the filings. You can look at like the 10Ks. Hey, so what do they actually say they're doing? Are they saying they're doing AI? I mean, of course, anyone can say it. So you have to be a little bit careful.
Yeah.
But I mean, if it's in a regulatory filing, they can't fudge it too much. You can look at the labor market. So look at who they're hiring. Are they hiring folks who have TensorFlow on their resume? That is probably a pretty good signal that they actually are putting their money where their mouth is.
What about social media mentions? Like, would you look at social media of DraftKings versus their competitors and say, like, is there any sort of signal there?
Yeah, we absolutely look at that. I mean, that's more in the brand dimension, so it's a little less about like, are they innovative or not? But I mean, that's certainly a component of, when we look at the 4 pillars of intangible value, the brand dimension is one of those 4 things.
Like, I know, like, she's not here to answer for herself, but why do you think, so I have a guess, I think it's size. I think she got so big that she had to start making bets on $20 and $30 billion market cap glamour companies, just because to just like continuously bet on innovation, she would have had to go lower and lower in cap size and almost turn the fund into a small cap fund.
So,
but then she would be like 20% of these companies. Like, she'd be filing 13 Gs every day if she was going to really keep doing the innovation.
At her peak, that was a big concern, that she was such a big percentage of some of the smaller stocks in her portfolio.
What was the size of this thing at the peak? 50?
ARK, I think,
the
was
flagship.
Yeah.
40, 50? Right. So then you become a big percentage of these companies, and that nobody really wants to do that if they can help it.
Yeah, so I think that's part of it. I think there's 2. When I say there's style factors, it's really these 2 things that have caused the kind of meltdown. First is unprofitable, so junk stocks, you could say, and the second is growth or expensive stocks, i.e., not value. And I think what you've seen is that the exposure to quality has been consistently negative the entire way through since inception. So it's not like she's changed anything about her investing style.
And when you say negative quality, just money-losing companies.
She's willing to put her money into companies that don't have any positive cash, have no earnings, sometimes no revenues.
Right, quality. So a lot of people who are not quants or not familiar, like, they would assume like, oh, that's a low-quality stock, meaning it's a piece of shit company. That's not what we're talking about. We're saying like quality of balance sheet and income statement.
We're saying like speculative stocks. Yeah. Let's say it's speculative stocks at a really early stage, don't have like any, stable or robust earnings.
Which Tesla would have been a low quality stock for most of the last 10 years.
Until it wasn't, yeah.
Until it wasn't. But like, that was...
So it's not obviously a bad thing to do. I mean, it's a bad thing to do on average. Like,
it's a bad thing to do with 100% of your money.
Yeah, the quants will show you that, the quality factor. So if you just on average bet on more profitable, stable earnings, high ROE companies, they tend to outperform low ones.
But paradoxically, the best performing companies are the low quality
Start off
ones.
as low quality.
Well, because there's more upside. There's more asymmetry. Like, if you can get in and find Tesla before it becomes a big deal, you can make 100x.
Yeah.
You're buying a company that everyone knows is a pretty robust, like high margin company.
Colgate, Palmolive.
Yeah, you're not going to be able to.
I think Facebook coming public is a low quality. It's a marquee brand. It's a blue chip social media company, but like on a factor basis,
right?
They're losing money in that transition from desktop to mobile. It was not a quality $40 billion market cap.
Well, and the stock got killed.
Well, even Google's IPO was the same way, right? That people were trying to short it at the IPO.
Dude, Apple's IPO got blocked for Massachusetts residents. The Massachusetts securities regulators said nobody living in the state can invest in the Apple IPO. Netflix transitioning from mailing envelopes to streaming definitely would have been a low quality stock, like on every metric.
John, throw up this next chart. This is interesting to me, Kai, that not only did she generate positive alpha on the way up, obviously, but even on the way down, and I know this doesn't really help her investors, but she has
She had 4% alpha versus
she
the
has
benchmark.
underperformed just a benchmark of non-profitable tech.
Right. If I were to strip,
What is the benchmark? Lottery?
the benchmark is
But,
is a basket of companies with the factor exposures that are equivalent to what she has historically had in her portfolio.
Okay, got it.
Right. And so it's you can see here it's 30% of her drawdown was due to the companies being on average junkier, 22% on average more expensive than the market. Right. So those two things combined are really kind of the
That's
big
half her.
drivers.
That's half her drawdown. Half her drawdown is there was no value in the stocks, or they were overvalued.
Right. Another way of saying it is like when you buy ARK, you're buying like two things. You're buying innovation, but you're also buying expensive junk stocks.
Right.
And the thing is that like for the first 5 years of the back test, like the value in the junk and growth part didn't really matter. It was kind of like came out in the wash, right? And then only more recently with interest rates being hiked and people starting to care more about cash flows and things like that, are these things really coming to hurt her?
So we're getting more or less of an everything balance today. The only thing that's red on my screen are bonds, but you've got ARK up 6%, XME, which got killed, is up 5.5%. Semis are bouncing bigly. And
Bitcoin, oil.
Yeah, everything,
I
everything.
call this everything day.
So
Buy all the things.
Adam Parker from Trivia Research, who we've had on the show before, showed that the second quarter that we just lived through was, I think, the 18th or 19th worst quarter ever. And that is
Oh shit.
the years on this list are not great. You've got a lot of depression. You've got 2020 Q1 COVID. You've got 2008 makes an appearance on this list one time. What else is in here?
2002, which is
right.
the WorldCom, Enron, all that bullshit that ended that bear market.
You've got a 1970 and 1974. I mean, this is a bad list. This is like
1987, 1974, 29. A lot of these years were in the 30s and 40s, I noticed.
Yeah.
Right. So there's some pretty bad company to be in.
So we don't need to overthink why these stocks bound. They just fell 90%.
Yeah.
So the worst. Wait, Mike. The worst quarter ever is not Q4 1929
It's 1932.
because that was the double dip. That's when you know what they did? They raised interest rates. These maniacs.
Well, they didn't know.
They didn't know, and then they did tariffs. Two stupid things. So they had no. We only know because we look at that and say, "All right, don't do that."
And the president at the time, during the Great Depression, would not acknowledge that things were bad.
Yeah.
Right. Well, we had to deal with the Nazis.
But
so.
don't you think you could replicate ARK's performance just levered NASDAQ 100?
So NASDAQ, if you were to run NASDAQ through the same kind of apparatus that I just showed there, you would find, yes, it has a beta of like 1.1 or whatever. So it's a high octane index, that it has exposure to growth and to low profitability. But you wouldn't, you wouldn't get the same exposure, I guess, is what I'm trying to say. I mean, I wish I had the chart up there, but if you look at this innovation factor that I put together, where you just like try and trend follow what sorts of technologies are trending and buy stocks that are related to those things, that thing is, when you strip out all the exposures, just on a pure factor basis, is like almost a straight line up.
Look at this. I'm looking at the TQQs and ARK, and I'm looking at a 5-year period, and they basically followed one another. So the TQQs, I don't know if that's 2 or 3 times levered NASDAQ.
It's double NASDAQ.
I think it's double. So again, like neck and neck, right? From basically
what was that break?
From the bottom, that was the top. From the bottom in 2020 through the top in 21. And then something broke in March of 2021. They completely diverged.
Meaning that's when the double NASDAQ started to outperform.
That's when ARK started to massively underperform. Massively. I think that's more of a size thing.
It could be a size thing. It could be because NASDAQ has the Googles and Apples.
But didn't Tesla have an amazing 2021? That's why this doesn't make sense.
Tesla did.
Well, that's where I think one argument is that, it's interesting. Most active managers historically have not wanted to use a transparent ETF wrapper. That, if you have an alpha, you want to hide how because people
And she did. She had it.
But the argument would be that by buying lower quality names, it's almost like a reverse Ponzi scheme. You tell everyone what you're buying, and then they go and drive it up. But you've already bought it.
It's diabolical.
So like it's
a reverse. Well, reverse.
because the trades are always.
I want to say pyramid scheme. I want to say
closed.
pyramid scheme. More so, reverse pyramid scheme. Because like you're recruiting other people to you're not asking them to bring in other people's
Is
money.
a pyramid and the Ponzi the same thing?
No, my friend. No, a pyramid requires you to actually be social and get other people to be social. A pyramid is like the makeup on Instagram.
Got it. So
It's not enough for you to buy my lipstick.
You got to bring your buddies.
I
in.
also need you to fill your trunk with lipstick and go sell it to your friends. And I've recruited you, and so I'm higher in the pyramid than you are.
I see.
And I'm building my own little mini pyramid beneath me. A Ponzi is just like, I took Kai's money last week. I promised him 10%. So I raised money from Michael today to give Kai back his money.
Right.
And then that just builds on itself until I run out of
It's
people.
no different than like when Berkshire Hathaway files their 13F. Like it's
Right.
like, oh my gosh, he raised his.
So this is that on
everyone goes
on
out to buy that.
steroids.
Yeah, exactly.
All right,
And
so-
this is that on steroids. So in other words, the mechanism is she buys a stock at 3:00.
but wait, that was not her intention.
No.
Obviously.
No. We're not saying that. No, people are doing this to themselves. She buys a stock at 3:00. It becomes part of ARK's holdings. And if it was a new position, then it really gets discovered on social media because people get excited about what she's buying. And she's doing that in the name of transparency.
Right.
But then people are Muppets and they're like, I'm buying it because so-and-so is buying it. And that could feed on itself, but then it works in reverse.
Correct.
It's hard for her to get out of a stock.
Yes.
Okay.
Yeah,
Let's just-
because I mean,
she's not trying
100
to get out
shares
of the
moves
stock.
a stock, right?
Yes.
If anything, she's doubling down, isn't she?
What do you mean?
Like she's not selling out of the stocks as her ETF is going down. She's actually kind of doubling down on these positions.
That's called a martingale.
No, it's not. I think she, you know what? I think she spent most of this year doing what most people would do with a portfolio, concentrating into favorite names. When you have redemptions, but you still have a job to do, and you have 20 stocks, hypothetically. She has more, but like anyone. You have 20 stocks, you have 10 billion under management, you get hit with redemptions for 2 billion. So now you have 8 billion to work with. You're not looking for your 21st favorite stock. No, you're getting rid of the 5 that you just sort of like, and it's called circling the wagons.
Yeah.
Everybody does this in every profession.
Yeah.
It's like when you're in trouble or when you're under siege or when you have money going out the door, you don't want to do the 20th best thing. You want to just greatest hits, right? Think about a restaurant has too many menu items and they're going out of business. You know what?
focus.
Everybody likes the cheesesteak. We're going to double down on the cheesesteak. We're going to put it at the top of the menu. 2 variations.
Did you guys know that Tesla's no longer her biggest position?
Yes.
Well, Zoom is, right?
Zoom is.
Yeah. I wonder if that's just natural market dynamics. Zoom's actually been holding up pretty okay.
She's made sales of Tesla and
really?
has added to Zoom.
Okay.
Yeah.
All right, well, how about that? All right, the market just closed. All right, not a bad day. I just want to return to this real quick. In Q2, Apple lost $636 billion in market cap.
It's almost like the money is fake and just exists on a computer screen.
Well, that's exactly right. Amazon, 578. Tesla, I think Tesla had its worst quarter ever. I'm not positive. Tesla lost $415 billion. Google, 400. And then on the other side
Let me
of
see
that,
this. I shouldn't have to ask, but I'm going to ask. Is a $636 billion
Yes.
1 quarter drawdown
Yes.
the biggest in
Yes.
history for any individual
yes,
stock?
I can just confirm that, right? It has to be.
I mean, that
assume
is.
it
Has to be.
That is just.
I mean, what was Enron or WorldCom?
No. They were never that.
No
they were never
But
that
nowhere,
big.
yeah.
Those might have been $80 billion companies at their peak.
Yeah, that's
Yeah,
true.
maybe.
So this is just the numbers are
staggering.
The numbers are staggering, right? And the stock wasn't even down that much. It was down 20%. How much was Apple down?
Yeah, probably.
I think it was in a 20% drawdown.
So you've got $2.5 trillion in lost market cap between Microsoft, Alphabet, Tesla, Amazon, and Apple. $2.5 trillion.
Now where the
But
money?
since the GFC low,
Don't say it.
from the GFC low,
Yeah.
the market today is up 640%. At the start of the year,
Wait, what
it was
market?
up 800%.
What market?
S&P 500.
No, it's not.
From the GFC.
Oh, the GFC. I'm sorry. I was thinking 2020.
I
What was
remember
up
the Dow at
800,
7.
now it's up
The
640.
Dow bottomed at 6,500.
big.
Where did the S&P bottom?
666.
666, right? So how much are we up from the low of the Great Financial Crisis?
640%.
even in a 20% drawdown or 15 where we are now.
But that we were up like 800,
Right.
and now it's 640.
Okay, pivoting.
But I don't get it because 800 minus 20 is
Pivoting.
Compound show.
Voyager Digital filed for bankruptcy this week. Do I have to like spend the time reading about what this even is or was, or like, is it not that important? It doesn't seem Bitcoin's rallying on this news, so how important can it be? And Chapter 11 sounds like they're not liquidating it. They're gonna try to find a way to keep operating.
Bitcoin's not rallying on this news. This news has been in the works for weeks.
Okay.
I think if anything, Bitcoin is rallying on the fact that all risk assets are bouncing, and Sam Bankman-Fried came to the rescue.
But it's not a rescue if it goes. It's not a rescue for shareholders if it goes bankrupt, but it's a rescue for the users. Like nobody's going to lose any. Nobody who's using the platform is at risk.
I don't know
No,
about
people are
that.
gonna lose money.
Yeah, they are.
You're saying like user accounts, people that have Bitcoin on the platform are going to lose money?
So there's two things. So BlockFi is the one that Sam Bankman-Fried through FTX
Yes.
backstopped. So far, it looks like they'll be okay. So FTX subordinated themselves to the depositors and have an option to basically buy out the equity holders of BlockFi for like a pretty low price, like a 90% discount or something.
Okay. But the
That's what he did
users,
there.
like the person that owns one Bitcoin and it's sitting on
Again,
the
like
platform.
non-investment advice. Who knows?
Yeah,
Probably
yeah.
fine.
Okay.
But you go to Voyager, totally different situation. So
Okay.
Voyager, the reason they're screwed is because they made loans to Three Arrows, right? And Three Arrows was in turn screwed because they made a leveraged long bet on Luna, right? So you can kind of see how this industry is so interconnected. Like it's like the GFC or like you mentioned LTCM all over again.
Yeah, it's dominoes.
Right, we're trying to figure out who's holding the bag at the end, and it looks like Voyager and its customers are.
So Voyager walked into a bankruptcy court and said Three Arrows owes us $600 million, and we have 1.3 billion in customer deposits on our platform, and we have X hundred million in cash. That's our current condition. That actually doesn't sound that bad. They had to file for bankruptcy though. Why? Like, was that part of the rescue package? Like, I'm trying to figure out like what is the
They
what is
went out.
causing them
I
to
think
have to be
I was
bankrupt?
reading the Matt Levine article was saying that they went out and shopped the business to try to find a white knight to come in and like buy them basically.
Whatever. They were just so upside down they couldn't.
Nobody bit. They were looking for crypto native firms who kind of were in the industry. Nobody
Like
went
Citadel.
for it.
Nobody wants
Yeah.
that hedge fund debt that they know is never going to be paid.
Well, basically, like what people were saying is, I value the business at zero. So you're just telling me that I'm going to come in here and bail out the depositors. Like, why would I do that?
Yeah.
So what ended up happening was they went into this. Was it Chapter 11? They went into the bankruptcy to
Yeah, I
kind
think
of
it's like a
buy more
straight up
time,
Chapter
have
11,
a
it seems
stalking
like.
horse in order to kind of figure out what their next move is.
Right.
And then in this case, Sam Bankman-Fried did actually try to bail them out, but it didn't work out in this case.
Okay.
Right? So it worked out in BlockFi's situation so far. Right. In the Voyager situation, it was really weird because this Alameda, this is a hedge fund, right? They are a client of Voyager's. So they basically, they borrow money from Voyager, use it for their trading activities, and they're also a equity holder in Voyager. And now
They double dipped.
Sam's going in and saying, "I'm now going to give you a credit facility as well." So it's like three things now. It's a
Here's
little
a
bit
quote.
confusing.
Alameda seems to be wearing every possible hat in Voyager's bankruptcy as a creditor, shareholder, and borrower.
That's very.
There is
very
a
rare.
general phenomenon of a lot of recycled capital within crypto, and this is an example of that. So Sam had a good quote he gave to the Journal. He said, because to your point, Voyager, that didn't work out. He said, if your strategy for trying to extend a lifeline to companies in need results in you never doing it to a company that files for bankruptcy, then you probably weren't doing your job. I guess he's talking from the vantage of a distressed investor,
Right.
which I guess he is at this point.
Yeah, it's like if you're a doctor and you see 10 patients and one of them dies, like that's your job. I mean, it sucks, but that's what you're paid to do.
Right. So all right. So this is something that is this the end of the line for the current leverage unwind? Because you seem to say
They said that the worst seems to be behind this. Who the knows if there's another leg to drop? But
Because can I ask you a question? And this is no disrespect to anybody in the industry, but like, has anybody seen the books at FTX, which is saving everybody? Does anybody know the liquidity at Gemini and at Binance? Like, not really. So like so in other words, you could run around being the white knight and like bailing all these companies out or trying to. And what if like there's nothing behind you? How would anyone know? They're not filing SEC like
Right.
This is not Bear Stearns or Lehman Brothers like where like you even know what the players on the
I think
board.
that the leverage unwinds so quickly that it would stand to reason that if there was more cockroaches, like they would have been out at this point.
But I'm making the point that there was a moment in the financial crisis where people like Dick Fold at Lehman Brothers were like actively and publicly talking about bailing other motherfuckers out. And I don't know if that was like a strategy. Like, worry about us. We're
Distraction technique.
right. I don't know, and I don't, and I'm not saying that's what's going on now. But what I am saying is Lehman was public. Like we knew what their business. Nobody really knows.
But we didn't really know what Lehman had, right? So much of it was off balance sheet, right? These weird SPV things.
That's right. They would take a huge loss and put a liability, push it off the balance sheet, file earnings, and then pull it back. So they would pay somebody to take a black hole off their hands, but it was like a predetermined, all right, and we're going to take it back 60 days later, which sounds like fraud.
It sounds sketchy.
Called Repo 151 or something like that. Somebody probably should have gone to jail for that, but the CFO was like a very sympathetic character, and she was like new to the job, and I just don't think there was an appetite to jail a woman and leave all these men out of it. But like she clearly, like of all the people, did something that was so obviously fraudulent. I mean, she was directed to,
Right.
but like,
Who was the Enron?
Skilling?
Oh,
Jeff Skilling.
Skilling was
Called the
C-
analyst
who
an
was
asshole?
Ken Lay?
the CFO?
that's Skilling.
No.
Star? No, hold on.
James Caan?
I forget. He went
Andrew
to jail.
Fastow?
So
Fastow.
he was CFO of the year, and the next year
Killing
he was
it.
in jail.
Yeah.
Meme reversion.
All right, but
So-
the 08 analog, I think is very apt for this kind of. I mean, it's on a much smaller scale, and off of Twitter, really nobody on earth gives a shit. But it's like 08 for Twitter.
Well,
For Twitter.
I think
Yeah, like 1 out of 3 people on Twitter are crypto people.
Oh,
right?
I think it's like, I was going to say for the companies, it's like the 1907 panic. It's just a bank run.
right. No, I'm saying for spectators, if you're not on Twitter, none of this is on the news. Like
Correct.
nobody knows who Sam Bankman-Fried is in America.
The other day,
Only if you're on Twitter.
when we woke up, I looked at my wife. I'm like, you have no idea what's going on in crypto. You don't even know.
I think actually what you said was, "You poor son of a bitch."
I said, you dumb bastard. That's what I said to my wife.
but you didn't actually say it.
I think there's a billboard driving into the city with like Giselle Bundchen
Yeah.
with like an FTX logo. My wife goes, "Who's that?" Like she goes, "Who's FTX?"
Oh, it's FedEx.
Right? Yeah,
Blissfully
why does
unaware.
Giselle work for Sam? I don't get this. Right?
So, all right. So, if you're on Twitter, you know who Sam Bankman-Fried is. You know what 3AC means. You know what Voyager is. You know what the price of ETH is. You know this shit. If you're off Twitter, none of these things compute.
Right, which is the reason like why in the GFC, the Fed, and even LTCM, the Fed bailed out all these companies or helped orchestrate a huge bailout. But the Fed doesn't care about what's going on in crypto Twitter,
No.
right? So
No.
that's why you have this guy
I'll tell you
Sam
one
who
better.
has to do it.
The Secretary of the Treasury in 08 was the former CEO of Goldman Sachs.
Right.
Hank Paulson.
Hank Paulson.
To Hank Paulson, a world without Goldman Sachs existing is unfathomable. It's like impossible. There's nobody in any position of authority at the Treasury, at the Fed,
Or SEC.
in Congress,
Yeah.
or SEC.
Don't you think Gensler loves this?
That's like an alumnus
it's
of.
just
They gotta
Guys,
put Brian
everything
Armstrong
they've
in the
said.
secretary position.
Don't you think
Yeah.
Gary Gensler loves seeing this? He's like, see,
Oh, he loves this.
this is why we're.
Yeah, this is why.
I mean,
Yeah.
This is why.
it's a huge opening for the regulators. They're going to come in here and look at like BlockFi and Celsius and be like, so you guys are holding yourselves out as a quote unquote bank, offering savings accounts, and then going out and acting like a hedge fund. Like clearly, we need to regulate this.
Well,
and you have
also-
millions of deposits.
well,
and
let me
it's
get
all
a
retail
Custodian.
investors.
Like they're a
Let me
custodian.
get this
Yes.
straight. You're a customer borrowing money, and you're a shareholder, and also you're a lender to them. What the hell is going on? Why are you lending and borrowing from the same equity, from the same company, and that you're also a shareholder in? It's like a carousel of money.
Well, that's what this guy said. It's like recycled capital.
Right.
Kai, what are you seeing? Because you do a lot of work here. Like, are you like when you analyze? I don't know if you're doing some on-chain work or whatever, or people going into the industry. Are you seeing in the data a dramatic slowdown?
So, yeah, you mentioned a really important point on chain, Right, so don't think back to the GFC analog. We have like the kind of off-balance sheet SPV things that no one knows what's in the kind of these kind of black boxes, and then we have like the audited like financial statements. I think the same thing is happening here, where you have on-chain, you have like DAI and Maker, you have the ability to actually look at which accounts are holding the money, and you can see Celsius repay, in many tranches their loans on Maker. But then anything off-chain, due to these centralized entities, whether they're exchanges or crypto lenders, it's very opaque, and it's even worse than in traditional finance because you don't have the financial audits on these firms.
There's no rules really.
So you have no idea what these guys
Well,
hold. So
because between BlockFi and the hedge funds sits Genesis. And so BlockFi is giving to Genesis, but they don't know what's going on or who their counterparty is or how many counterparties are interacting, and basically all of the exact same risk exposure.
right.
There's
Right.
no
And they were all exposed.
So there's no Reg NMS in crypto. You do a trade with somebody, there is absolutely no requirement that that person on the other side of the trade or that the market or exchange in the middle of the trade is providing you with the best execution. Like none of that shit exists in this world.
So I think the big irony is that when crypto kind of came about, the whole promise was everything will be on chain. Like it'll be like the CFTC, like these clearing houses, and everyone kind of like there's no counterparty risk. It's trustless. Everything is in the open. You can kind of go there, use your analysis, and kind of audit like forensically who's stealing the money, like where the money's going, etc. But what's happened is that you've built this, because of many limitations of the decentralized model, such as like additional costs and things like that. You've ended up with a huge edifice of intermediaries that are effectively like prime brokers and
they're all centrally controlled
companies, but with less regulation. And so
Right,
you actually
they-
end up in a place that's worse than if you had.
They look like Wall Street, but with no rules.
Right.
Because they're sitting in between all of these transactions or housing the transactions internally, and they're not taking place on a transparent blockchain.
Right.
They're happening, who knows, like over a phone call.
Yeah. So I think the hope is that we learn from this like crisis, like any other. Right. We put in regulations like we did in 08 and before that that just make sense. Kind of clear out some of these issues. And we also, by the way, hopefully we'll see kind of a clearing out of the deadwood, right? Like it's kind of like the analogy to the forest fire. We have all these things like 9,000 tokens. Like a lot of them are crap and they shouldn't exist.
Do you know?
You can start the FINRA of.
Well, I was going to say, do you know what the two most important rules are for the traditional securities market? Mike, do you know what they are?
No.
The two most important: the Securities Act of 1933 and the Securities Act of 1934. And they were written 90 years ago, and they still govern like almost everything that takes place in the securities markets today. The timing's not an accident. In the 1929 crash, and then the ensuing depression through the 30s, they basically went, okay, somebody should be in charge of this shit, and there should be some rules.
Yeah.
And that's how you get the Securities Act of 1933. And when you go to take a Series 7 or a Series 65, that's literally what you're learning. So
Well, that's right. I think you should do FINRA, right? FINRA is a self-regulatory organization.
FINRA was the NASD, which came along with the advent of the NASDAQ. So believe it or not, that was once part of NASDAQ, was having the NASD was like, because all of a sudden you had all these independent dealers dealing with each other on a network as opposed to the exchange, which was members. So it was the National Association of Securities Dealers, which then became merged with the New York Stock Exchange's securities arm and became FINRA.
But basically, but it regulates its own members, which doesn't really exist in.
Well, also is an SRO. It's a self-regulatory organization, which people have philosophical issue with that, but we don't have an SRO even for crypto. So not only do we not have federal oversight, and the banking regulators are they have no standing yet. There's not even really a serious attempt amongst the companies to self-regulate. What's the organization that regulates crypto? Does it exist?
FTX.
At this point, right? But think about that in the traditional securities world. If there was no attempt whatsoever, even at a FINRA and a self-regulatory, so that's where we are still.
Right.
It's so early, so bullish. I'm just kidding.
So anyway, Tesla is no longer the world's largest electronic vehicle manufacturer.
Electric.
What did I say? Electronic?
Electronic.
They make They make toy cars.
What is?
BYD.
What is it?
BYD.
But isn't that just batteries?
No, they do buses.
Okay, that's Berkshire Hathaway has been invested in that for like 20 years,
Oh,
right?
08.
Oh my God. Okay.
Or 08, 09.
What do we have? John, we have a chart on this.
To me, it's remarkable because after they bought it, it actually got chopped in half, and then it didn't do anything for 10 years.
Wait, BYD is worth how much?
Well, they've got a Hong Kong
1 trillion
and
Hong Kong
a,
dollars.
and a China A.
I can't believe how big that thing is.
Yeah, no, they've done very, very well.
Okay, how did it get so big?
Well, they were very early in electric vehicle buses. That was kind of, and then from the buses, they developed the technology and realized the batteries were kind of part of the gold.
Right.
So now they're selling not only the buses, but they can actually sell the batteries to other.
Is that the only thing Berkshire Hathaway's invested in China of any consequence?
I think at the moment.
I saw Charlie Munger get asked a really tough question about, like, at the height of the Chinese concerns when there was a lot of harsh Biden rhetoric. So I think this was during Daily Journal. Mm-hmm. You know how he's like, he does the sit down thing.
Yeah.
So somebody asked him a question about how could you like allocate money to China? Like how could you allocate U.S. taxpayer investor money to China? Because he oversees both Berkshire Hathaway and Daily Journal's investment portfolio. And he was saying like, we should not expect the Chinese to have an identical society that we have, number one. And number two, wouldn't it be better if the U.S. and China were against the rest of the world? Like, in other words, like, imagine a partnership between the U.S. and China. Who the hell could stand against that?
Right.
Like, just like thinking of the world that way, which nobody ever does. But what if the U.S. and China actually had a partnership? Now, he's obviously biased because he's got investments in it. But I would imagine somebody like yourself probably thinks that would be a better situation than the current situation.
Yeah, I mean, I think.
I know it's pie in the sky, but I'm.
Well, yeah. I mean, actually, they call it like a G2 world.
Right.
That, like
a G2 world with like a healthy agreement on the big things.
Yeah. And I think, one of the U.S. and China economies have never been more intertwined than today.
Right.
Politically, you could say not so much, but business people are getting along just fine, and I think U.S. companies in China are doing just fine. Right? We showed the Apple and the Exxon Mobil's, and that's where there's some, I think, almost hypocrisy. People will say, oh, this about China, that, and then it's like, well, they're typing that on their iPhone, and it's like, well, where do you think that thing came from?
I want to do before we get out of here, I want to do ETF trends through the first half. Some interesting stuff going on. Michael, what are we looking at here?
Kind of the boom and bust of thematic ETFs. A lot of this is driven by ARK. So if you back that out, I'm not sure that there's really much there. Have you guys heard about the new? There's a night ETF. Have you guys heard about this?
Yeah,
I saw that.
Where they basically, so I forget who first documented this, but a lot of the returns happen outside of market hours, which isn't that shocking considering that's when most of the news happens, right?
Gap ups, gap downs.
Yeah, most of the news happens outside of market hours. So there's a fund, and I'm kind of surprised it took so long for somebody to do this, where essentially they're buying the close and selling the open.
Yeah.
Your
That's
thoughts?
so smart. That's so genius. Wait, so on a gap down day, what happens to does the ETF trade throughout the day? And you're just down?
They're buying the close and selling the open. They're doing it with futures contracts. I don't really know the mechanics of how they're doing this, but Kai, what do you think? Bullish?
Look, I think. I mean, I haven't studied this myself. I mean, when I used to run my last CTA, we did strategies like this. We would like trade reversal and mean reversion into the close and at the open and around option expiry. I haven't looked at this overnight effect. What I've read about it, what I've heard about it, is it has to do with like a risk premium associated with market makers holding inventory overnight, right? Because if you're gonna own if you're gonna buy U.S. stocks at 4, right, and hold it until 9:30 the next morning,
you should get paid for that?
If bad news happens over the night, that could be bad.
There should be a premium connected to that.
Right.
And people try not to do that, especially day traders, prop traders. If they can help it, they don't want to go home long positions.
Right.
Therefore, you should get paid if you're on the
Now,
other side
almost
of those trades.
always
That would
you
be the
see
argument,
you
yes.
see back-tested strategies that fall on their face.
Why are you shaking your head? You don't like it?
I'm just trying to figure out how many Altoids Michael has in his mouth right now.
I believe that's called a cheekful. He's got a cheekful.
I'm curious to see whether or not this like erodes that I don't want to know. I don't know if it's alpha or whatever the hell you're calling it.
Yeah.
I don't think it's big enough to. I don't think it can. I think this is more of a structural thing, but I'd be curious to see how that works.
I'd be less worried about. Sorry.
No, I would think it would work more. Close on Friday, open on Monday, because that you really don't want to hold it
on
over
the weekend.
Versus
I'm
just
super
overnight.
bearish on Tuesday, so I think that's a good point.
How many ETFs have you built at KraneShares?
I think we're up to just over 30, including European listed.
Okay, so a lot of the funds in the U.S. you have a European version.
Yeah.
Okay, so all right.
Another interesting note. This comes from ETF Trends. Year-to-date net inflows, the most popular category, and it's definitely been a minute that this was on the leaderboard, were dividend ETFs and ultra short-term bonds. The ultra short-term bonds totally make sense, and I guess dividends too, because defensive stocks have done much better. We were talking about like year-to-date gains and losses, or I'm sorry, Q2. So some top adding market cap companies were Eli Lilly, Merck, ExxonMobil. So I guess that makes sense.
Worst performing ETFs year to date.
It's got to be ARK, no?
Excluding leverage and inverse. Crypto related, cannabis related,
What else?
fintech innovation. All three are ARK products. SPAC related, meme related. So basically like a complete reversal of 2021, which happens all the time.
All right, so the bottom four: blockchain, digital transformation, Bitcoin miner, Bitcoin crypto, which is, I guess, what's BitQ? Bitwise,
That's a Bitwise.
If you have to ask, you can't afford it.
Skybridge crypto, Alarian crypto.
Yeah, anything crypto.
It's a who's who of shit.
No, but look,
Oh, man.
the DSPAC ETF year-to-date return,
If
negative
you own the
64%.
stuff up top, you need the stuff on the bottom. You need your psychedelics, your cannabis.
Psychedelic ETF.
I saw that in the second quarter. I think ETH lost 69% in the second quarter, which is nuts.
That's horrible.
I didn't realize that there's more than one cannabis ETF. The median market cap of cannabis companies are like $300 million. We need multiple
That's
ETFs for
in
this,
Canadian dollars.
and that's in
Yeah.
Canadian dollars.
What was the big one? Tilray?
Yeah, I think it's the biggest one. It's definitely small though. So I was not aware. Put up this chart on feast or famine for thematic. It's interesting that all of the thematics are getting hit at once. I don't see space on there, but I bet it's somewhat in the mix. Although maybe it owns enough like Boeing and defense stocks that it's okay. But like
That's all ARK, no?
Yeah,
No,
how much
this-
of this is ARK?
no. This is all of the funds.
Yeah, but I'm saying ARK is the biggest thematic.
Global thematic funds trailing 12-month flows. They were $250 billion in early 2021, and they have fallen to somewhere around $75 billion.
But still not bad. You remember Tilray was the first meme stock? I remember Rosh Hashanah. It was 2018, and this name started going ballistic. I don't remember what the catalyst was,
It was
but
probably not Rosh Hashanah. Was probably not the catalyst.
Having to hang out with
I remember where
family.
it was at that point. So it ran to $41 billion in market cap. It's under 2 today.
But that was another one of
under two.
these newly public short squeeze thing. There've been a
It
million
was like
of
the
those.
original. Not the original, but of this era.
Like I watched. What was the camera IPO?
GoPro?
GoPro.
GoPro went
Disaster.
GoPro went from like 10 to 100 to 0. Is it? I shouldn't say that. It might still trade.
What about like the 3D printers?
Right, but these were major short squeezes.
Plug
So,
power,
Josh, you're right.
like-
At the IPO, GoPro went nuts up to $12 billion, and now it's $870 million.
Beyond Meat. Sorry, no offense. Beyond Meat was one of the big post IPO squeezes that we've seen. So
Duncan, you still holding?
Oh yeah, yeah. It was good while it lasted, but yeah, I'm still holding.
are we doing anything else on the CTF thing?
No,
What
it's
do you guys feel about the state of the ETF business right now? Like the market sucks, but everyone seems to be holding up.
Yeah.
I haven't heard any drama.
I think there's a big home bias in the U.S. I think it's almost like some of these investor sentiment surveys. Like everyone's bearish, but they've never held more U.S. equity, and that's where you can have from this GFC being up 800 to 640, and no one misses a beat because they're still up 640, and that's where I would think the market does what's least anticipated. Most people hold little to no non-U.S. because, over the last decade or 12 years, anything outside of the S&P 500, the more you own, the worse you did. And if you're on an investment committee or you're an advisor and you got to meet with your clients, you whittle it, and now it's zero.
But
and what's the market's going to do?
It doesn't take 5 years of overseas outperformance to get people interested again.
Yeah.
I think it takes like 4 quarters. I think 1 year of and it's never happened in 10 years. I asked Michael to run this calculation for me from 2012 through the end of 2021, so the last decade.
Calculation.
16.5% returns for the S&P, which is 360% on your money. Why would you be looking elsewhere if elsewhere looks like 70% returns, 90% returns?
Yeah.
But one year that's good for international and just okay for S&P, and it's game back on.
Well, here's one part of my notebook. Okay, so since the low, S&P 500 is up 640.
It's like Ryan Gosling sitting here with the notebook. All right, go.
Can you tell my wife that?
Yes.
MSCI emerging markets. GFC low, S&P's up 640, MSCI EM's up 191, MSCI China's up 191. But here's like our take on it is that if you looked at MSCI emerging markets 12 years ago, 14 years ago, MSCI China 14 years ago, it was all financials, energy, industrials, materials, and real estate, all value sectors. So you go into this decade of growth stock decadence, and the big EM benchmark, the big China benchmark is all value. So is it that EM and China were out of favor, or just that the broad benchmark, you kind of got what you paid for? And to prove that would be, well, what's a growth sector in EM and China? Well, obviously tech.
Sure.
So MSCI emerging market tech, again, S&P's 640, EM 191, China 191. EM tech was up 724.
Okay.
728, I'm sorry. China tech was up 2,260%.
Wow.
Now, the problem is like 14 years ago, EM
You
tech
couldn't get exposure
and
to
China
that.
tech was like 20 bips or something, 200 bips. So you had to go out and you had no exposure to it. And
Well, I'm one of the people that thinks classifying stocks by what country makes no sense when you consider that almost all of the out or underperformance stems from sector industry.
well, yeah, that's a
So I still don't know why portfolios are constructed that way, but they just are, and it's like a convention that many people have accepted, but it's just not that you have to be in the top performing industry only.
Yeah.
But like if you were starting from scratch, if you were starting our industry, asset management, from scratch, you would not do it with a fucking heat map. with the
style
globe.
box.
It's like meaning. We had Lindsay on the show 2 weeks ago. Here's some venture capital pitch decks. He's like, if you were raising money for a startup 10 years ago, you had the whole world, and you would say these are our growth opportunities. He's like, now half the map is black. You're not going into China. Definitely not going into Russia. It's half the map. So we're building
or India.
Right. So we're building portfolios based on countries when we know that the difference in performance is coming from industries. What's in favor, what's not. We know it.
Yeah.
Look at every country. I wanted to finish with what I thought was really funny. But now that I say it and you guys are in the room, it's more tragic than funny. Did you hear the one about the 90-year-old Morgan Stanley broker? Okay. He shot his partner multiple times in an Oklahoma City branch. It was his 61-year-old colleague who was supposed to be the guy that was inheriting his book. So I just thought that this was, it's obviously a tragedy. I don't think he's dead. But, no, knock on wood.
So for 20 years, the 90-year-old
The 90-year-old's like, I'm going to leave soon.
Yeah. I'm on my way out next year, I swear. I swear.
Well, 20 years ago, the 90-year-old.
70.
This is, all right, here, police, let me set this up real quick. A 90-year-old Morgan Stanley broker has been accused of shooting a colleague multiple times in Oklahoma City branch office. Police say Leonard Bernstein in Oklahoma? This is already suspect. Walked into the office last Thursday and shot Chris Bayouth, 61 years old, several times before driving away. Bernstein was later arrested in a traffic stop and charged with shooting with intent to kill. Witnesses told investigators that Bernstein and Bayouth had worked together for 9 months, and the elderly man was handing his accounts to the younger business partner. It's unclear what went wrong. I know what went wrong. The international allocation. It's all.
Yeah.
They one guy said 30%, the other guy said 35%. Why are there 90-year-old brokers handing their businesses off to 61-year-olds? Shouldn't it be like a team of 30-year-olds? Like, doesn't
Servicing his 90-year-old clients.
like aren't we doing succession for a reason? It's not like
Yeah.
I'm going to hand you off to this gentleman who will also be retiring very quickly.
Yeah.
Very soon after.
And I'll shoot him to make it faster.
You know, yeah, we'll
Accelerate,
I'm sorry.
accelerate.
We'll get rid of this guy. Sorry, you worked at BlackRock iShares for how many years were you there?
I mean, going to the BGI days, it'd be like 13.
Okay,
But I actually have a great Jeremy Grantham story.
tell it.
Let's hear it.
Okay,
This is the time.
So 2000, the beginning of 2008, the Hartford CFA Society, BGI, iShares, we sponsor it. So we get a table. The first speaker is from the New York Fed. This guy drove up, does his little shtick about, there's some issues out there, but
Is that what's his name?
it was not the head of the New York Fed. This was like an underling.
Okay.
And he does his little shtick about, we're there's little flare ups, but we're
Transitory.
We're on top.
Contained.
We're on top of it. And he walks off the stage, and the next speaker is Jeremy Grantham. And Grantham
Everything that guy just said is bullshit.
Yeah.
That's exactly what he said. He was like,
You're all gonna die.
He actually said, it's a good thing that guy's leaving because I'm actually going to eviscerate him, that we're headed into a global crisis and the world's about to end and banks are going to go bankrupt. I actually, because we had sponsored, I went up to him after and I said, I'm Brennan, with Barclays Global Investors, and I just had a question for you. And
Am I going to have a job in 6 months?
Yeah.
so he said, you work for Barclays. And he's like, you should get your resume ready right now.
And they actually survived.
Well,
Sort of.
Barclays Bank, basically sold BGI and iShares to BlackRock.
Worst sale of all time?
Is that
Worst sale of all
how
time?
they survived?
That's how they avoided being nationalized.
But then they bought Lehman. What the hell is that about?
Well, it was just Bob
What a
Diamond was, he was a banker. And so he, saw this is the opportunity to grow Barclays Capital. You can take over Lehman Brothers and you get the whole building for free. And, but Jeremy Grant, absolutely nail it. I mean, he was 100%, he called it. It was pretty amazing.
I wish he would stop calling it though. Like that's all I'm saying. No disrespect.
Don't shoot the messenger.
Yeah. No disrespect. Anyway, I asked you that question that you were at iShares of Black. You must have walked into some offices where there were some 90-year-old brokers walking around or financial advisors, and you're just like, what am I going to get accomplished here? Like you must have walked into some.
Well, I was
decrepit branches.
trying to think that, when we first met, you and Barry were over by.
No, don't talk shit about us.
Grand
I want you to
Central.
talk shit about other people. No, I'm actually going to tell. Actually, I remember that. We were at 90 Park Avenue.
No.
No.
Before that.
Oh, no.
No, you were like
on
off
44th,
of Vanderbilt.
44th Street.
We were
Fifth.
on.
You were between Vanderbilt and Madison.
Yeah. We were on 42nd, 44th.
No.
44th.
44th and 5th Avenue.
Yeah.
And I think you may have just joined.
Okay.
Yeah, you were there on Michael's first day. No, but you came up and you were like, "Hi, I'm covering you guys for iShares. Let me see what you're doing with your portfolios." And we were like, "About that," because we were not very settled yet. I mean, this is 2012 or something, or
Probably before that.
2011. So we were just not like 100% in agreement, even internally, on what we wanted our portfolios to look like. But you were just like, guys, I walk into some of these RIAs. They have like 30 CFAs running around picking stocks. They don't ever beat any benchmark. It's all a big elaborate show to impress the clients. Like, what if we were to just like start from scratch and look at ETFs versus any of these other options, which don't make sense. But I remember us having that conversation.
Well, I think I was most impressed with you guys. The team was like, we're doing this thing called a blog. And I was like, what's...
Yeah,
I mean,
yeah.
I had moved from San Francisco, and I was like, what's a blog?
Yeah, we were
I'm
we were
a
freaks,
techno-idiot.
freaks in the industry at the time.
But like, it was like, no, like, we're going to write. I'm like, and what you're going to try? You're like, no, we're going to give it away. And like, we're going to get clients by trying to educate
Oh,
them.
you thought we were like a newsletter? Like, what do you mean you're writing?
Oh, I was like, this is like a foreign concept. Like, but you fast forward and you created this incredible thing. Like it's and at work, people at iShares were like, why are you going to go see those guys? Like they run no money. And I was just like,
Oh,
no,
really?
no.
Who said that?
Well, it was just more of like, iShares.
Larry Fink said that. Don't go waste your time with those guys.
I would never bring you up with him.
Okay.
No. It's more of like you just do the math. If your iShares are so big, how do you move the dial? It's not talking to a small RIA. You got to be talking to the biggest RIAs, the biggest asset managers to
See, they should have focused on our patents, and then they would have known like we were the next thing. BlackRock iShares were always very good to us, include up to this day. We have a great relationship with those guys.
Yeah.
So
it's incredible what they've built.
100%. We're happy customers. It's really hot in here, so let's do favorites, and we'll let you guys escape the room. We're gonna have a talk about the temperature in here, Duncan, shortly after the show.
I'm comfortable.
You're okay?
Yeah.
Oh, maybe it's. Maybe
I'm
it's
hot.
I don't
or just
control the
me.
weather.
Dude, I'm being recorded right now, and I'm glistening. No, we got to figure out a solution for the next 2 months.
Prima donna.
I really am. Here's my. I'm going to start first, and then hold on. You watching this show called The Bear?
Everyone's talking about that.
Nobody in the room. What about you,
Nicole?
Nicole? Not even.
I
Nicole?
saw it advertised in the subway.
Listen to me. It's 22-minute episodes. It is like one of the best new shows that I've seen in the last 5 years. It's like a chef. Do you like cooking, like food?
I like to eat.
Yeah. It's like a chef in Chicago who worked at this guy. I think somebody told me he was on Shameless, which I didn't watch, the actor. He was a chef at 11 Madison Park, which is the best restaurant in the world, or used to be. And his brother kills himself, so he has to move back to Chicago and take over his family's sandwich shop. But he wants to elevate the sandwich shop into like more than just hot dogs and cheesesteaks.
Why do they call it The Bear?
I still don't know. I'm 5 episodes in, and they have not explained this. It is such a great show.
All right, I'm going to watch
and
it.
it's really, really fast paced. I was thinking of you when I was watching it because the way they shot it looks like uncut gems. Like the camera's shaking, like you don't really know they're all talking at once. It's like very frenetic.
Okay.
Which is my kind of
Yeah.
show. Anyway, that's my rec this week. It's on FX or Hulu.
What are you guys getting into?
I actually opened up Spotify for the first time in a while, and
Look at you.
Went on the Joe Rogan podcast. Mark Andreessen was on.
Oh, really?
Yeah,
Huh.
I got through about half of it, and then I was in the subway, and then Spotify can't handle like buffering.
Was it 9 hours? How long
It's
is
like
it?
3 hours or something, but so far so good. Andreessen's been in the game for a long time.
Does crypto come up at all? Do they get there?
He alluded
Okay.
to it, but we were about 50% of the way in. It was AI and Ex Machina and the Google engineer who thought his AI was real.
Yeah.
They talk about the history of computing and going all the way back to the early days. So it was kind of fun jaunt through history.
I would definitely listen to that.
Yeah.
You got to listen to a lot
Brandon,
of commercials
anything on you?
to get there. though.
Yeah.
I'm reading Malcolm Gladwell's David and Goliath.
What year is it?
I have no clue.
Okay.
But
Wait,
it's
why?
excellent.
But no, great
Just
book.
came out, right?
Why are you reading that?
Because you are David.
Well, if you're fighting, you're challenging
Yeah.
the big behemoths in the asset management industry. I've loved his writing, and I was stuck in an airport, and I was like, hey, I've not read this one.
Okay.
And, but it's excellent.
All books are better in the airport. We were talking about this on the show last week. I rewatched True Romance. Duncan, did you watch it yet?
I have not yet.
Okay. Absolutely flawless. Holds up
okay.
like nothing. I mean, what a movie.
He
What
didn't,
a
he didn't
movie.
take our word for it yet.
Apparently
No,
not.
honestly, it's not free on any streaming, so I just haven't broken down and read
I
it
learned
yet.
today that Michael never saw Scent of a Woman.
Yep, it's a big hole in my repertoire.
It's like a top 5 Pacino.
I haven't seen that one either.
How are you involved in film? Come on. All right. Anyway, add that one to your list also when
Okay,
you're done with
will
that.
do.
All right. Listen, you guys have fun today?
That was excellent.
Yeah?
Awesome.
All right. We all learned a lot from each other, I feel like. Yes? Okay.
I feel like I didn't bring much to the table today.
No, you would definitely. You would
Yeah, the
definitely.
charts.
You would no, but you did have the charts, and we needed that. So hey, guys, don't forget for the latest in financial blogger apparel, check out idon'tshop.com. We're probably going to be pulling those beach towels off pretty soon, right? Nicole,
What's
what do you
next?
think?
We're doing
What's not in summer yet?
Yeah, but I feel like if you haven't bought one yet, like you
what are
don't
we
need
doing
it.
for the fall attire?
I don't know, something pumpkin
We
spice.
brainstorm.
All right, we have a little bit of time to plan that. John, great job today. Thank you so much. Duncan, great job today.
Happy birthday, Nicole.
Happy birthday,
birthday.
Nicole. Thank you guys for listening. New Animal Spirits podcast every Monday and Wednesday. New Portfolio Rescue with Ben live, 11 a.m. Eastern every Thursday. And thank you guys so much for listening. Make sure to leave a comment. Make sure to leave a review. We will be back with you next week. Have an awesome weekend.